I'm Max Keiser. This is the Keiser Report here with Stacey Herbert. Today we're talking to Simon Dixon of Bank to the Future. He's been around since almost the beginning. He's got a wealth of knowledge. Stacey.
We want to talk to you about the solution for diamond hands, as it's called in Bitcoin. The last episode of Summer Solutions, Max and I discussed Bitcoin fixes everything, essentially, especially with the monetary system, the banking system, central banks, all that sort of stuff. But once you have your Bitcoin, the having in the diamond hands, holding on to it, not having spinach hands, panic selling during this correction, and this could be the first correction for many people new to the Bitcoin space. So this 50% crash, is this normal? Is this something to be expected? What should people do? Discuss the strategy, the solution to spinach hands, to panic selling, to FOMOing in.
The first thing to appreciate is that Bitcoin's been in a 12-year bull market since its inception, and there's been lots of crashes and corrections and all sorts of things in between. But the longer trend is 12-year bull market. So once you appreciate that, but people join at different phases. And at every phase, people have always come in when they're new to this with a fear that they've bought the top. They were the last idiot that bought the top, everybody is getting out, and that they bought it. This inner fear really haunts the person that hasn't really developed the diamond hands yet. So really, it's a game of both psychology and strategy. So I could share with you what the strategy we've adopted in order to get through all these bull markets, but unless you get the psychology right, you just won't be able to implement. And the psychology is that when we're in the bull market, you're in Bitcoin thinking. And Bitcoin thinking is about understanding the supply and demand dynamics of Bitcoin. Bitcoin thinking is, it's 21 million, there's never going to be any more. It's that people can own their own money, it's people can spend their own money. It's that everybody needs Bitcoin to combat this melting ice cube and combat inflation, and everything's good and the price is going up and you're seeing your paper wealth increase. You start planning this wealth effect. You start feeling more intelligent than everybody that was telling you it's a scam, it's a Ponzi scheme. It's a currency just for drug dealers. Your Tesla needs it. You're thinking JP Morgan needs it, Apple needs it, Microsoft needs it, and the whole world, and you're on cloud nine. But once it hits into the bear market and we get these corrections, your inner reptilian fiat thinking comes out. And in fiat thinking, it's all about taking on more debt in order to drive more consumption. In Bitcoin thinking, it's all about savings in order to drive a wealth effect so that you can then become an investor with your newly found wealth. In fiat thinking, it's all about scarcity. It's about knowing that your money's going down in value, and then you start thinking in terms of converting your Bitcoin to fiat so that you can preserve the mental wealth and paper wealth. And you start thinking that Peter Schiff was right, you're the last idiot that bought it. But the only way to combat that is to look back, take out the chart, understand that we're in a 12-year bull market, and we get these corrections, which are mainly created by the 10% of insiders that is trying to take the 90% of traders that were in trying to just get in for a get-rich-quick scheme and take their Bitcoin so they can accumulate them.
Max, Stacey, and Simon Dixon were all together at the first Bitcoin conference in Prague back in 2011. We've seen 15 of these kind of pullbacks since then. And every single rally has a big name, and every single drawdown has a big name. They undergo what I call Bitcoin derangement syndrome. We had a big rally coming in on Michael Saylor's purchase over their MicroStrategy. And now on the pullback, the Peter Schiff has been replaced by a new high-profile naysayer, and that would be Nassim Taleb, who also seems to be delving into Bitcoin derangement syndrome. I think you're the one who pointed out that as the Bitcoin price goes higher, we attract a higher class of Bitcoin deranged people. So clearly Nassim is a higher class than Peter Schiff. He's got more books out there. He's considered to be more of a serious person. But now he's gone crazy. He's fallen into the trap. What is it about some people that not only do they fear the pullback, but they actually go insane, like Nassim Taleb?
They're just scared of the fact that they maybe not had full conviction. They didn't believe that it could go up further. They don't fully believe in the supply-demand economics until they've been through it. And so they look to other people. They look to other experts, and somebody that's actually driving forward electricity, talking about the inefficiency of Bitcoin seems like a very credible argument and a reason to actually think, well, this time it's different. Bitcoin's no longer in that 12-year bull market. It doesn't reach higher highs again. And it's that this time it's different thinking is really what's driving people, and that inner fear of everyone around them, because we're doing this thing that was so impossible to achieve. The thought of creating a financial system outside of the financial system, the thought of actually being able to create something that combats this unfixable financial system, it brings in that inner fear that it was crazy all along and it was never going to happen. But Bitcoin time and time again punishes the people that do that, as they end up giving those Bitcoins to those with the diamond hands in the end. We can compare Bitcoin in terms of just purely looking at the charts to something like Amazon if you want. Amazon has 90% market corrections, but Amazon's the stock that nobody should have sold. Just like Bitcoin is the financial hedge that nobody should be selling unless you haven't done a few things. And one of those is many people, because Bitcoin is also a unit of account and medium of exchange, if it chooses to be, because you can spend it, people actually don't make that separation between their spending money and their savings. So when you're thinking about your spending money, you're thinking about what they can buy. And so volatility is really bad when your goods are priced in something, your mortgage is priced in one currency, and you're trying to buy it with another currency, and you see that deplete away. So one of the first things to learn there is the separation. You wouldn't use your Amazon stock in order to make purchases, but with Bitcoin you can. So it's a very unique asset class in that sense. And so therefore you have to use slightly different strategies. But yeah, Bitcoin being a protocol and a hedge against a monetary system that actually I talk about unfixable, but there is a solution to the existing financial system, and that's a slow removal from capitalism to socialism to communism, and using central bank digital currencies as the mechanism to roll over all this over-leveraged, rehypothecated Ponzi scheme scams in order to try and keep the system alive a bit longer. But the solution means the removal of all your privacies, rights and freedoms, which also drives the use case of Bitcoin, because it just happens that the financial system that exists outside the financial system